Check, please.
Hey, welcome back to Everything Money. In this video, we will analyze the chip maker AMD. We like this company. You probably like this company. That's why you're clicking on this video. We'll look at the financials about where they're heading, mention their stock buyback program and why they're doing it, and look toward what we should be paying for this company. We're value investors, so a lot of our videos hopefully sound consistent to you, and they will as the market continues to decline. But in this video, you'll learn the financials and what we should be paying. And if you want to trade AMD, join us toward the end of the video, and Mo will show you how to trade this. Let's get after it, Paul. AMD.
All right, this is one of our most requested videos, stocks, everything. I'm a buyer of Intel. Everybody considers Intel to be this dead dinosaur. I don't agree. I think they're going to do a good job. It was just announced today that NVIDIA might be using Intel to make its chips, etc. But AMD is the David versus Goliath, right? Yeah, maybe it can be, but it's been the David versus Goliath for a very long time. So let's go to our 8-pillar software. And guys, we will sit here and use our stock analyzer tool, which has been the most popular part of our software, at the end of this video, to show you what you should pay for AMD based on assumptions for the future. So hang tight, but listen to our analysis. So guys, first off, AMD is down quite a bit in the last year. It hit a high of 164. It's at 118 right now. But look at this max chart for AMD. It was as low as $1 something. Where was it $1? Like right here in 2016 when the Cavs won the title. Man, look at this. So look at this. In 2000, Seth, it hit $44. You might sit there and say, yeah, that's still an awesome return. It took 22 years and it's still only up 2.5 times in 22 years.
Yeah.
And by the way, in the meantime, it fell 95% along the way.
Yikes.
16 years later, it was still down 95%. So let's go to the 8 pillars tab. Now, again, expensive, but even more so, that bothers me. Shares outstanding. They have increased their shares outstanding by 29% in the last 5 years. What does that mean? It means that they're diluting their investors. But I don't blame them because the stock's expensive. So would you rather take on debt that you owe at its face value, or would you rather give people really, really expensive shares that you don't think are worth it? The company, to me, when they're doing this, they're acknowledging our shares are really, really expensive. And we're going to give it out there. Let people take it because it'll finance all of our activities that we need to do without having to worry about debt we have to pay off in the long run. It's just diluting owners and giving on equity.
Now they do have an $8 billion share repurchase authorization, Paul.
They do?
So February 24th, AMD announced its board of directors approved a new $8 billion share repurchase program.
That's a terrible idea.
In addition to the $4 billion share repurchase program announced in May of last year.
Are you kidding me?
So, when does it expire?
Well, we're pleased to expand our share repurchase program based on the strength of their balance sheet and expectations for
strength of the balance sheet. What does that do with the price of rice in China?
Yeah, so I mean,
by the way, they have very little debt. Look at this. One thing they do have, I love, they have $8.6 billion in cash and cash equivalents, and their total liabilities for the entire company is only $5 billion. So they can easily, yes, they have a strong balance sheet, but share buybacks should have nothing to do with the balance sheet.
Well, there's a phone number. We can call one of their investor contacts and see what they have to say about their buyback program. If you want.
That would be exciting. Guys, when a company is buying back shares, when they're using your cash as you are part owner of the company, you get access to that cash. As they're using that cash to buy back shares, they're investing in something, whether it's another company or themselves. So when they're buying a stock at 100 times PE, I don't get that. Unless they really, really believe that their future is going to be huge. But let me tell you what the analysts think. So let's look at the income statement right here. They did $16 billion last year in revenue. That's a lot compared to the previous years. Analysts think that in 2026, they're going to do $40 billion. It's still a big jump. I don't know. Is it justifiable? That's a really good question. Here's the interesting part. Because of their dilution, now, Seth, here's where the dilution does factor in.
Mm-hmm.
They're expected to make $4 a share this year, according to analysts. In 5 years, they're expected to make $6.78 a share. That's not much of an increase. Why? Because they're probably going to dilute. Now, if they start buying back shares, that'll help. But this ain't good, guys. This is not as a company that's killing it like this should not have only a 50% growth or 60% growth in its earnings per share over a 4 or 5 year period. That's a little concerning to me. So apply a 15 PE to this. You're talking about a $100 stock. It's currently at 120. You might sit there and say, well, Paul, 15 is too low. Okay, maybe it is. But the bigger and bigger a company gets, the harder and harder it is to grow at a faster rate. And the way you justify a high PE is by giving having a higher growth rate. If two companies are exactly the same profit, same everything, except one's going to grow 20% a year, one's going to grow 5% a year, I am 1,000,000% going to give a higher PE to this one, the one that's growing 20% a year, because I can grow into more profit much faster. But this isn't growing. This earnings per share is not growing a ton. So I don't get this. This just really, really confuses me. Their cash flow. Thought to myself, oh, maybe they issued shares because they're making acquisitions. So we go to our cash flow statement on our software. Acquisitions and dispositions.
Nothing.
Blank.
16.
They sold something. Yep. They sold this in 2016. They didn't buy anything. They sold something. Their last time buying something was 2012.
Which actually surprises me.
Yeah. So guys, I don't know. To me, it sounds a lot like the previous years. And AMD makes a great chip. Don't get me wrong. They make a great chip. But I think it's interesting that Intel spends $20 billion on a factory and AMD doesn't even make $20 billion in revenue in a year. And I still think Intel makes a great chip. And they're really expanding. They're doing a great job. I think AMD is just expensive. We'll show it in our stock analyzer tool at the end of this video.
It'd be fun to tour that, Tim. It'd be fun to tour that Intel property.
Yeah, how long is that going to take? 5 years?
Yeah, it's 2025. It's up and running.
Wait, how fast?
2025.
2025.
Damn, that's faster than I thought. That's only 3 years from now.
We'll be doing the show then. So, Mo, are people trading AMD? I'm sure they must love this thing. What's going on?
Yeah, so this has been quite the fall. That's for sure. Now, I'm going to pull this up from a swing trading perspective just because this is going to kind of give us a little more guidance of where things will go, and it's because of these major moving averages. The good thing, they consistently have excellent volume. I mean, this is dating back to August of what year is this? 2021. I mean, look how solid this volume is. Every day there's volume on it, and I'll talk about that when we get to the swing day trading part. But right now they're just struggling, sitting right at that 200-day moving average. At some point, this is either going to get a ton of buyers coming in and flush over this 100-day moving average, or get a ton of sellers coming in and push below that 200-day moving average. So this is definitely something to watch. Now, Paul, Seth, you guys know every single day AMD is doing something from a day trading perspective, and you can see it happened today. Look at this. I mean, this is incredible. All of this buying volume, and each one of these candles is 15 minutes, and we traded this live today. Incredible. Great stochastic. Yesterday, same thing. Great buying volume coming in, great candles moving up. This was Tuesday. Same thing. Great candles moving up. And when you get big movements up, you're going to get big movements down. And you got that on Tuesday as well. So this is a great stock to day trade, great stock to swing trade. Let's see which direction it goes. One way or the other, it's going to go somewhere, and it's going to happen fast.
So guys, this software, it's pretty incredible. We just did a lot of stuff looking at a lot of companies, looking at this company in full detail. And the reason we created the software, our users were looking at us saying, we want to be able to analyze stocks without waiting for you. So they requested it, we delivered it. This software, everything you saw on the screen, also comes on your mobile phone, free of charge. You get everything you see here, the 8 pillars, all those financial statements, retirement calculator, stock analyzer tool, 8-pillar portfolio where you can put up to 50 stocks in your portfolio, and it'll tell you how the companies look all together as one company. Exclusive video content. Mo, Seth, and I create videos every single day that are only available to subscribers of our software. Watch list, you guys saw it. You can add up to 500 companies to your watch list, and it'll notify you whenever it hits a certain price that you want. But the biggest thing we have, guys, exclusive EM community chat. There are over 6,000 people in this chat. Research is tough, and it's time consuming. But with 6,000 people and growing, you can go into the chat, type in AMD. It'll take you right to the most recent comment. It'll list all the time that was mentioned. You can go there and start having a conversation about AMD. Hear other people's opinion of it. Have a group do research together, not you painstakingly reading a 10K over and over. It's exhausting. This alone is worth the cost of our software, $1 per day. You get all of this all on your mobile phone, $1 per day, less than a cup of coffee. And if this can increase your returns by 1 or 2% a year, or decrease your losses by 1 or 2% a year, it'll lead to hundreds of thousands, if not millions. 2 ways to sign up, everythingmoney.com or patreon.com for our international users. Sign up, $1 per day, whatever price you sign up for now, you're locked in the future, even as we increase the price every month.
Paul, in your conservative approach, what would you be paying for?
Well, I'm gonna do both conservative and aggressive. So I'm doing that 16% revenue growth. Now keep in mind, that revenue growth we were talking about with AMD earlier by analysts, that's only for 5 years. I'm gonna extrapolate it out to 10 years from now. I did 8, 12, and 16% revenue growth. Profit margin, look at this, guys. Last 10 years, it did 5%. I started at 12. Why? Because they lost money along the way. They're more established. They're covering their costs much better. So I did 12, 16, and 20. 20 is closer to Intel's level. Okay. Free cash flow margin, same thing. What'd you say, Mo?
Wow.
Well, I have to because I don't believe it's fair to look at AMD and say, yeah, they're going to make 5%. No, they've gotten enough traction there where I think they're covering their fixed costs and they're able to really drive some profit. Same with the free cash flow. Now, here's the deal. PE and price of free cash flow is around 45. Guys, I'm putting 14, 16, 18. But you know what? Actually, I lied. I'm going to go higher just because I want to show how much I don't think this is a good deal. I do 12.5% return because you have to have your margin of safety in there. Analyze. Guys, 30 is the low side. 105 is the high side. So, guys, I'm looking at this saying, I'm not touching this thing. But here's the good news. With our software, which I'll explain to you in 2 seconds, I can click here on any of these numbers and say, add to my watch list. Boom. Automatically puts it in, $58 target. Notify me. That's it.
I had to chuckle to myself because we used to do the math ourselves. Remember, I used to have a calculator where you're looking at Y charts.
Yes.
And you would scramble over some numbers, which I'd always mess up. Maybe that's why you made the software, Paul. Just to drive the show along.
I made a software because Seth couldn't handle a calculator on his phone.
You know, I was looking up some articles about AMD in the past, specifically from 2015, 2016, when this was a $4 stock or something, $4 stock.
Yeah.
And all the news sounds exactly like it is the same. They're innovative. They got a new CEO. They're planning on doing things. They're taking over the market. They're grabbing share of the market from Intel. And if you would, this one says, we do not believe you should be investing in this at the moment. If you had $1,000, we would. What is this, Motley Fool? Yeah, don't put it in this at the moment. It's like, well, I guess the story hasn't changed.
Wait a second. So when it was $4 a share, don't invest in it.
Pretty
now
much.
It's $120 a share, invest in it.
And the story sounds very, very similar.
Interesting. Okay.
Except in 2015, AMD faced possible bankruptcy amid declining PC sales.
Interesting.
So be careful out there, especially with these high-flying stocks out there. And as we say, be cautious. This might sound, Paul, you know what's funny is we get some feedback that we're a little repetitive in our thoughts in that here's
exactly.
I thought that too. Yeah, here's an AMD video, don't buy AMD. And I'm like, I switched that word repetitive to consistent.
Yeah, consistent.
And we'll sound very repetitive when all the markets are down.
And by the way, look what I did that wasn't repetitive. Guys, I changed. Look at, you hear Mo, I usually go on these numbers for profit margin. I sat there and said, no, that should not apply here. If I really wanted to be repetitive and a non-thinker, I would have gone, okay, I'm going to do 5%. I don't think AMD is going to make 5%. I think they're going to be making much higher percent on their money.
And in the end, these are just Paul's numbers. You can put in whatever you want. And the great part is we provide the tool to finally figure this out, which I needed very dearly, Paul. I'm glad I have it in the palm of my hands on a cell phone. So, all right, that's our take on AMD. We will keep you updated. Fondle the like. As always, subscribe. We'll see you next video.